Hey, strategic wealth preservation followers. This is Chris Vermeulen from the Technical Traders. And I want to share with you a little bit of insight on where I think the markets are going, the big picture view, how the markets, the stock market and the precious metals market are kind of related and could potentially play out over the next several years going forward. But more so, what could be happening this year that we need to be aware of, because there's going to be some great opportunities unfolding. So to kind of kick things off, I want to start with a high level view just to make sure everyone fully grasps the different stages, the emotions that are within the market, and of course, what sectors and commodities can do very well during various stages of the market. So let me quickly start off here with more or less the market stages. If you don't know the four stages of the market, then you need to understand that there's these four stages, and each one requires a different strategy to trade or invest with. Some of them you don't even really want to be taking part of. For example, a stage one basing formation down this red shaded area is usually a very bad time to be trading. Investing long-term could be more of a great opportunity because usually prices are low and you're really just looking to buy when things are fair value or undervalued for a long-term gain. Now, stage two is where what we all love for every asset, and that is a bull market phase, an advancing move that's a big, strong trend, could last multiple years to the upside. And this is where you can buy, you can actively trade breakouts, patterns, and of course, also invest. Now, a stage three topping phase, which is where the focus is right now, because that is what we are in with the stock market. And I'll go into greater detail with this shortly, but stage three is very volatile, very choppy. It's a tough time to trade. Sectors do very well for a couple of weeks or a month or so, and then they'll roll over and fall back down. So there are these aspects to a topping phase that are very difficult to trade. And we saw growth stocks really take off. They ended up topping more or less back in 2021, and we saw a huge sharp decline. The ARK ETFs are a great example of that, of where everybody put their money, and the ARK ETFs are in a stage four decline, potentially far from a bottom still. But the overall stock market is in a topping phase. And if we know where the stock market, like the SP 500 is, then we can kind of figure out where we can expect gold, silver, and other assets to move. Now, the final stage is a stage four, and it's shaded green as well because big opportunities are made during trends. It doesn't matter if it's trending up or trending down. So knowing that, let's take a look at the participant emotions of the market. And we had this euphoric phase back when, everybody was getting free money. Everyone's stuck at home. Everybody got interested in gambling or betting online, trading stocks because sporting events came to a grinding halt. We saw this euphoric phase, and then it broke down and has been trading sideways ever since in terms of the stock market. And now we're in this complacency stage where people are thinking 2022 was the bear market, it's over, and that the market's going to start going higher. But the reality, based on stage analysis, based on the next slide I'll show you as well, we really, I think, are coming into this complacency stage where we're going to go into a stage four decline. This is where people start to get anxiety. They can't believe how much they're losing. They start to panic. They eventually bail out of their positions. And then, of course, it's a lot of anger, hatred towards whatever investment they just lost a fortune on, and it can lead into depression. So this is the kind of area that we're at. And it's very important to understand that if we do go into a stage four decline, I'm not saying we are, but if we do, you need to be prepared with your assets. You need to be prepared mentally as well. So the last kind of stage here are the market cycle, which is this blue and green cycle. And then we've got the economic cycle, which is the yellow cycle here. Now, the stock market typically tops this blue cycle before the economy does. Investors can see businesses slowing quarters ahead of when the earnings come out. And that's why the stock market tops. Investors want to get out if they know the businesses are going to be slowing down. Now, the last two sectors that are the strongest performing just before the stock market really puts in a major top and starts a stage four decline are energy and precious metals. Energy, we saw back last year, did very well. It has come down a lot from those highs, but it's still holding up, and the energy stocks are still doing very well. The other is precious metals. We got gold flirting with all-time highs. Precious metal miners are leading the way. And these are the last two kind of things that really kind of come to life just before the stock market sells off. But just keep note here that when the stock market goes into a stage 4 decline, precious metals, energy, stocks based around them, the commodities, pretty much always pull back and sell off with it. And that's important to know. So we're gonna cover that in a little more detail here. So let's jump to the charts and take a look. This here is my trading chart, and we've got the SP 500. This is the weekly chart, and more or less we had the COVID crash over here, and then the market recovered, and we got back into a new kind of bull market cycle where a very strong uptrend. And then we got into the market turning down into a stage 3 consolidation phase. And this is that consolidation phase that the market is in right now. We're in this complacency phase, waiting to see if this market is going to start a new bull market or if it is going to roll over and go into something much deeper, much scarier for investors. Now, if we were to compare this with a shorter term chart that I use to trade the indexes, you can see the phases below. You can see the green and the red telling us when to be long or potentially short inverse in inverse ETFs. And the key here, one really important aspect, is to understand that you need to realize that the market has different stages, and during different stages, they need to be traded differently. For example, during a bull market phase, which is this phase here, you get nice, long, big trends, big returns. You can see how the trend is up and to the right. But when the market breaks down and starts to weaken into a stage 3, you can see how a lot of these moves, these green sections, are short-lived. They don't have big follow-through. There's a more downside potential almost than there is upside potential. And so this requires a different strategy. And the market has a great way of people getting used to a bull market, losing their shirts during this phase here, and then people usually will jump to a new strategy, try something different. The reality is, if you can survive and keep your capital during these timeframes, which is what I focus on is capital preservation, then when the next trend here starts, which is either to the upside or to the downside, a stage 2 rally or a stage 4 bear market phase, we can take advantage of those strong trends. We just need to know that over the past year, it's really been about preserving capital, keeping our money so that when a new opportunity arises or a new big trend comes up, we can take advantage of that. So let's jump over to the charts. Let's take a look over at knowing that the stock market is potentially in a late stage 3 on the verge of selling off. Let's take a look at what gold can do here. So if we pull back, all right, so here we've got the long-term chart of gold, and the scenario that we're at right now is very similar to what I think we saw, believe it or not, all the way back here when the stock market tech bubble bottomed out. We started to see the stock market sell off, and gold, silver miners continued to struggle and sold off for a good chunk of that. A pretty decent correction. Doesn't look like much because we're ramped up here in terms of price action. If we were to zoom in, we can see how much we saw gold pull back from the highs. Gold pulled back about 24%. Now, if we take a look at so this correction right here was a stage 4 decline. The next stage 4 decline was right over here, the 2008 global financial crisis, and gold pulled back 34% during that time before it started to take off. Now, I do feel as though we are in a new super cycle to the upside. I mentioned this in the last quarterly report as well, where the new super cycle was more or less started right back over here. And I feel as though the new super cycle started over here. Now, along the way for a 5, 10 plus year super cycle, we can have mini bear markets. We can have these sharp pullbacks in price. And that is kind of where we are right now. We are in one of these consolidation phases. Potentially, we see gold pull back when the stock market goes into a stage 4 decline. Maybe it pulls back to the lower end of this range. Maybe it heads down a little bit lower. Maybe it pulls back even deeper just before it has a knee-jerk reaction rally. But we need to be prepared that if the stock market recession hit, we could very easily see gold pull back. The same with silver. To me, it'll be one of the last opportunities before we go into a big rally. Where we are right here is this type of scenario again, where the stock market sells off. We have some type of blow up and collapse. It will pull most likely gold, silver down with it, and then it'll be an opportunity to potentially get in for the next big move. The next run from here, especially if you can accumulate down at these lower prices, is going to be about $2,500 to $2,700 for gold. And then it goes up to about $3,400, $3,500 an ounce. So there's a lot of upside potential, but there might be a little bit of weakness. And weakness, believe it or not, is what I want. We want one more good opportunity. We want a little financial reset so that we can get into the market, get more physical metals. I'm big into physical metals. It's the only type of metals I actually own. And then play the upside move as a long-term kind of insurance and speculative type of play. So that is kind of the view there. Now, if we were to take a look at, let's actually pull up the dollar index, below it here, and we can kind of look at both of these compared to each other. And we'll jump to the monthly chart. What we can see here is last time the dollar had a huge rally, we saw the dollar topped out. We saw a huge sell-off in price. Gold ended up putting in a substantial rally, somewhere from around 300, 200 and change, all the way up to about 500 and change. So a pretty decent rally. Then we had the last super cycle where the dollar came all the way up. The market put in a bottom. This was a stage for the tech bubble. Obviously, every bear market in stocks is going to be, or in the stock market is going to be a different reason, but there was a bear market in the equities market and gold pulled back. The dollar was up. Obviously, money was flowing into the dollar as a safety play, a safe haven, a defensive play. As the dollar goes up, gold typically comes down. We saw the same over here. We ended up seeing the dollar rally as the stock market collapsed, the financial crisis, which sent gold tumbling 34%. And we've got the dollar back up in these nosebleed kind of area here. And I think there's potential for the dollar to really go all the way back up to these recent highs or up to the 120, maybe even a little bit higher. And what would happen if that happens? The stock market's going to sell off. We're going to have the typical margin calls, forced liquidation. It will cause people to have to sell their precious metals and drive the futures price down. The dollar will rocket higher, which naturally is going to pull gold down. And eventually the dollar will top and the stock market will find a bottom. And then, of course, the dollar will probably go into a multi-year decline and then cause one of these multi-year rallies in gold. Here was the multi-year decline previous, and then it kind of just chopped around and built a stage one basing for a while. Right now, the dollar is in a stage two rally phase. Once the dollar tops and starts to head down, that's when gold is going to rocket higher. So hopefully you're following along with this, because this is really big picture, important stuff for long-term investors to know if you're paying a premium right now or not. I feel as though we have a big premium more or less on precious metals and gold to buy it right now. Everybody is piling into the sector, but there is a big disconnect. In fact, if we take a look at what gold is doing compared to gold miners on the bottom chart, let's just zoom back here. If we take a look at what gold and miners are doing, we've got gold right up. This is the 2011, 2012 highs. We carry that across. Gold is right up at these levels. Where gold miners are trading down, they peaked out and they are trading down still nearly 50% from the highs. If this was to me, a legitimate big real breakout in gold, miners should be up here flagging out, or they should be way higher already leading the way. So there's still a big disconnect. And to me, that is investors, gold is seen as the global asset. It's not. Silver and miners to me are more the North American kind of speculative play to try and take advantage of the sector. But gold has people in every country accumulating it. And that's why it's holding up a lot better than the miners. And the miners, if we go into a bear market for stocks, a stage 4 decline, we're going to see miners probably sell off in a pretty big way and potentially come down to these lows. These lows are all the way back down to the 2015, 2016 lows again before putting in a bottom. And then there'll be a screaming buying opportunity along with gold and silver. So there's a big disconnect between where the price of gold is, where the price of gold miners are. Typically, miners should be leading the way, and they are 50% off from where they really should be, in my opinion. So anyways, that's the kind of high-level view of the stock market, how it kind of relates to the gold market, what to expect if we go into a major bear market, a real full-fledged bear market, and how we can expect potentially the dollar to rally and provide this opportunity over the next 6, 8, maybe even 18 months from now. This could be a long process. These are major, multi-year patterns that are unfolding. They take time, and that's how I see things unfolding. Anyways, that's it for now. I'm Chris Vermeulen from the technicaltraders.com, and talk to you soon. Bye-bye.